Hey guys, today I'm going to be analyzing a brand new position in my portfolio. This stock is extremely undervalued, growing revenues at over 40%, and they're already profitable by a healthy margin. I think that the market is sleeping on this stock, and once it starts getting the attention it deserves, you could easily see returns of 200 to 300% over the next few years, as long as management keeps executing on the level they have been. I'm really excited for this video today, so don't forget to leave a like if you get some value out of it. Let me know if there are any other stocks you guys would like me to take a look at in the comments as well. We are of course talking about Valens Company, ticker symbol VLNS on the Toronto Stock Exchange or VLNCF on the OTC markets. Valens is currently trading at $1.70 per share, though the stock actually popped over 10% today at the day I'm recording this, so currently they're closer to about $1.86. This company is super under the radar right now, being valued at only around $250 million Canadian. In my opinion, that valuation should be double right now, never mind how much higher it could be in the future years. I wouldn't be surprised if the share price was closer to the $3 to $5 range 12 months down the road. This company did revenues of $84 million last year and are expected to do $116 million this year, so this is by no means a small company in this space. They are doing a ton of business and generating a healthy profit with a 17% EBITDA margin for 2020. And yet the business is dirt cheap and is being valued at a fraction of most of its competitors, most of which I think have much worse long-term growth prospects than Valens Company. So what does this company actually do? Well, they operate in the Canadian cannabis industry, but unlike most of their peers, they are actually not a grower, so they aren't subject to many of the normal challenges that plague producers, like bloated inventories and badly optimized grow cycles. Valens is the largest provider of cannabinoid-based ingredients in Canada, the largest third-party manufacturer of cannabis products, and the largest and lowest-cost purchaser of raw biomass, meaning raw cannabis materials. Valens is a manufacturer of finished consumer cannabis products such as vapes and edibles, as well as a processor of raw cannabis materials into refined extracts, which can then be sold to other companies or directly to consumers in partnership with other brands. So as I mentioned, Valens is unlike most of the other companies that grow cannabis. Most companies in the cannabis industry are in this area. They are cultivators. Valens is in a real sweet spot in the industry where they can fully take advantage of the fastest growing, highest margin products like extracts and edibles without the headaches that come from having to cultivate, grow, and harvest plants on a mass scale. The products that they produce include full and broad spectrum oils, distillate, resin, isolates, vape cartridges and disposable pens, infused beverages and edibles, and also THC-free products, which are currently not available on the Canadian recreational market, but are more targeted towards consumers that are interested in the health and wellness benefits from mostly CBD-related products. The goal of this company long-term is to become the go-to company when you want to manufacture cannabis-related products. 2020 was a massive year of expansion for this company as they cemented their position as the leading Canadian cannabis product manufacturer. They acquired a Canadian edible manufacturer called Life Foods, which is going to allow them to immediately start going to market in edible categories that aren't really being addressed by the market right now, such as sugar-free options, edibles using premium ingredients like coconut and cocoa butter, and real fruit gummies, and many more products. They got an incredibly good deal on the price of this acquisition as well, paying only $25 million upfront and up to an additional $17.5 million based on certain 2022 EBITDA targets. The company is expected to immediately start generating profits this year, and if they hit their targets, the total cost of the acquisition will be only 4.2 times 2022's EBITDA, which is a great bargain. They've also been massively increasing their overall production capabilities and should be bringing a brand new facility online in the second quarter of this year. The GTA facility will mainly focus on the production of manufacturing infused beverages using Valens emulsion technology, and will be capable of producing 6,000 bottles an hour initially with the option to scale up production based on demand. Valens believes that long-term extract-based products will dominate the overall cannabis industry, and I fully agree with them. The convenience of a vape cartridge or edible compared to smoking flower-based products cannot be understated. Vaping is easy, quick, and convenient with very little smell, and the evidence suggests it is potentially better for your health as well. Edibles appeal to a more casual base of consumers who might be more likely to try a beverage or a gummy than to try smoking or vaping. This is why they have specialized in becoming the largest scale manufacturer in pretty much every one of these categories. The volume of production that they are able to put out there and their global distribution capabilities are pretty much unmatched, making them a first choice for any company looking to outsource manufacturing of their products. In Canada alone, they are projecting extract-based sales could be as much as $5 billion in 2024, and I think they have a realistic opportunity to take 20% of that market, which would imply $500 million of revenue, of which I think 10 to 20% could hit the bottom line. So this company could be doing $50 to $100 million in profit in 4 years. This isn't even considering the opportunity outside of Canada, which is obviously way, way bigger. Seeing as how Valens is scaling up their production and distribution capabilities right now, I think that this company is going to be very well positioned to start forming partnerships with companies in the US as soon as federal legalization hits. When we consider the United States and the global opportunity, there is a chance that this company could end up being worth tens of billions of dollars in the future. And that's where the potential to 10 to 20x your money from current prices is. Depending on how this company executes, I think 10 years down the road from now, this company could have 100x from current prices. So now let's talk about valuation. In my opinion, this stock is criminally undervalued for how fast they are growing. We're talking about projected top-line growth of 38% this year and 54% in 2022. And once the opportunity arises to move into the US market, that growth will explode even further. As you can see, most cannabis companies aren't even expected to be profitable on an EBITDA basis over the next 12 months, so we really have to do a comparison based on revenues. Currently, the stock is one of the cheapest companies in the cannabis industry based on forward revenue and EBITDA estimates. They're trading only at 2 times enterprise value to revenue for this year, compared to companies like Aurora and Canopy, which are trading at 8 times and 19 times respectively. Looking out further to 2022 and 2023, management has provided a very helpful table in their investor presentation. As we can see, Valens is dirt cheap compared to their peers in the Canadian cannabis industry. They are trading at only 1 times 2023's revenue, while the average Canadian cannabis company is trading 7 times higher. The same goes for EBITDA. They're trading at 4.6 times 2023's estimated EBITDA, and the average Canadian cannabis company is trading at almost a 9 times higher valuation. Average analyst price targets put this stock at trading at $3.53, or about a double up from current prices. I believe this company could return 70 to 270% over the next 3 years, depending on what type of valuation they end up commanding over time. To arrive at these estimates, I simply took analyst forward estimates for EBITDA and applied what I think is an extremely conservative multiple of between 7 and 15x. Really, I believe that a company that is growing this fast should definitely be trading at closer to 20 to 30 times EBITDA, especially considering that their peers in the Canadian cannabis industry are trading at over 40 times 2023's estimated EBITDA. But I like to be a little more conservative in my estimates, so I've applied a multiple that would be more often seen in the packaged foods or pharmaceuticals industries. Longer term, though, I see this as a company that will eventually have a market cap in the billions or even tens of billions. And honestly, I think they have the potential to 10x or more over the next 5 to 10 years, as they not only expand within Canada, but also move into the US market when the opportunity arises. Lastly, I would like to examine Valens Company's balance sheet. I believe it is vital that you always analyze the balance sheet of any company before investing in it. A stock can be in a growing industry, it can be dirt cheap and have a seemingly bright future ahead, but it isn't worth buying if the balance sheet is so weak that it could go into bankruptcy. Luckily, that isn't an issue for Valens Company. The stock is in a strong capital position with almost $50 million in cash on the balance sheet and less than $10 million in debt. Their total assets outweigh their total liabilities by almost 5 times. And the company keeps a very light inventory compared to most cannabis producers. Low inventory is good because the value of cannabis products are constantly fluctuating and currently have primarily downward pricing pressure. Companies holding huge inventories are losing value on that product and will eventually have to do massive write-downs on their assets. Meanwhile, Valens is cash loaded and ready to buy other companies' inventories at rock bottom prices so that they can turn them into finished products and sell them back to those same companies or directly to consumers. Their goodwill and intangibles is also quite low, which is good because it means that a majority of this company's assets are in hard assets like cash, real estate, and plant property and equipment. This also shows that they haven't way overpaid for a bunch of acquisitions in the past, which is why you see such huge goodwill balances on some cannabis companies' balance sheets. Considering that Valens is already profitable, and given the current strong position of their balance sheet, I see a near 0% chance for bankruptcy over the next few years. And they will likely only need to issue additional shares in order to fund activity like mergers and acquisitions that would ultimately benefit the business in the long term more than the dilution would hurt. In my opinion, anything under $2 for this stock is a steal on a long-term basis. Anything under $2.50 to even $3 is still probably a great deal on a long-term basis. I plan to build this position initially to around 3 to 5% of my portfolio. I do have a very high level of confidence in this company, but given the fact that they are so small, and many of their future prospects are not definite yet, and remain to be seen how well they can execute on them. So for that reason, I'll be keeping the position relatively small, though I think it could grow a lot larger over time if this stock goes where I think it is going. And I might also just grow this position larger over time if the fundamentals continue to improve and the price action doesn't follow. If this business becomes a more sure bet and the shares are not performing as I think they should be, then I could see myself allocating as much as 10% of my portfolio to this position, which is quite high for me and around the size of my largest position currently. Let me know what you guys think of Valens Company in the comments below. I'm really interested to hear everyone's thoughts around this stock. A lot of work and research went into this video, so if you got some value out of it, don't forget to like and subscribe for more content like this in the future. Thank you all for watching the video today. I hope you have a great day, and I will catch you in the next one.